Apologies. Apparently, I wasn't being heard. Apologies. Apparently, I wasn't being heard. Good evening again, everyone. Please do invite your family, your friends. We are allowing other guests to join us, and we start in 3 minutes. Good evening again for those who would have just joined us, and welcome to NCB's Capital Markets Wealth Chat. Today's topic is securing the bag. I'm Jodi-Ann Bonitto, and I will be your host for this evening's discussion. Let me introduce our panelist, Dr. Karrian Hepburn Malcolm, who's the head of Wealth Management, NCB Jamaica Limited. We also have with us this evening Kerine Golding, AVP Alternatives and Fund Management. Let me extend a special welcome to our new clients. You're now part of the NCB Capital Markets family, and we're happy to have you here. When you hear the term securing the bag, what comes to mind? For me, it is someone who is working actively towards building wealth, whether through a career, a business venture, or some other means. Well, today, our panelists are here to share with you proven wealth creation strategies to assist you in securing your bag through investments. Have you started saving towards your child's education? Do you have funds for your down payment on your dream home? When you retire, do you have enough funds to maintain or give you the lifestyle that you desire? At the end of this evening's discussion, you will have a better appreciation of, one, what are the steps to take to building your investment portfolio? Two, what investment portfolio mix better suits your risk profile? And three, how it is NCB Capital Markets can assist you on your personalized investment journey. Dr. Karrian Hepburn Malcolm, please tell us more about NCB Capital Markets.
Thank you, Jodi-Ann. Afternoon, everyone. I am happy to see you here. So, who is NCB Capital Markets? I know that you're definitely familiar with NCB. So, NCB Capital Markets is a subsidiary of NCB that provides investment banking, asset management, and wealth management. So, in a nutshell, we help create wealth or we help raise funds for both businesses and individuals. So, you might be wondering, okay, NCB, I could save there. I have a fixed deposit there. I'm already investing. Okay, great. That's a good start. But you know what? That's usually the first step, step number one. So once you've accumulated some kind of savings in your NCB account, you might be thinking, what next? How do I, actively and aggressively start to create wealth for my family and for myself? And that's where NCB Capital Markets comes in. So we offer a wide array of products, bonds, mutual funds or unit trusts, stocks, equities, you name it. We have a plethora of investment products to meet your needs. And you might wonder, how do I access NCB Capital Markets? Well, through several ways. So we are headquartered in Jamaica, but we have tentacles throughout the region. We're in Trinidad, we're in Cayman, we're in Barbados, we have a presence in Guyana, and it goes on. We literally have access to the entire Caribbean. And as for Jamaica, we have wealth advisors in almost every NCB branch. So you're able to walk into most branches and have a conversation with a wealth advisor. Or you can call our wealth hotline. I'm calling it our wealth hotline, where you can talk to our rep on the phone. Or as a matter of fact, I'd say we're 24 hours because we have our NCB Capital Markets app. So you could go on and place trades and look at the market any time of day. And we have some other special apps and tools that I'll tell you about later on in the presentation. So with that, I will hand over to Jodi, where she and our other speakers will show you exactly how NCB Capital Markets is able to help you on your journey to wealth creation.
Thank you so much for that, Dr. Karrian. How many of us knew NCB Capital Markets had reach and presence in Guyana, Barbados, Cayman, Trinidad, and just to name a few? I'm sure most of you, if not all, would have heard about the Trans-Jamaican Highway additional offer for sale recently. We were the lead broker on that transaction, and that speaks to our commitment of making investments accessible to all. Kerine will now speak to us about our unit trust portfolios. Kerine, tell us how it is our unit trust portfolios give investors access to investment opportunities that they may not have been able to access on their own.
All right. Thank you so much, Jodi. And it's a pleasure to be here to share in this evening's discussion about investments and about unit trust in particular. So persons may be wondering, particularly if it's the first time that you're hearing about unit trust or you have an interest in unit trust, but you don't fully understand what it is. What exactly is a unit trust? So a unit trust is a structure that allows for many persons to come together to pool their money and to invest in a portfolio of assets. And these assets could be stocks, could be bonds, real estate, loans, repos, to name a few, right? And in exchange for putting forward their funds, they get units in the fund. So unit trusts are managed by professional and experienced managers, such as NCB Capital Markets Limited, which Dr. Karrian would have given you an introduction to. And they are ideal for investors who desire exposure to these various asset classes without having to manage the investments on their own, or simply because they may not be eligible to directly own these assets, right? So if anyone would have joined us online just now and is wondering how this discussion about unit trust funds is important to you, here's why. So I think we can all agree that life is not static, right? And because of this, financial independence and wealth creation is not about a single life event or a few events. So investing is about planning for the short, the medium, and the long term, no matter what your appetite is for risk taking. So I know earlier Jodi-Ann posed a few thought-provoking questions, and I want to expand on them a little bit more. So let's say you're a young adult. You're looking to further your education. Maybe it is that you want to start planning for that bachelor's degree or master's or a professional certificate. No doubt after doing all of this, you're going to be fairly stressed out, right? And so you may be looking to take a trip overseas to visit your family and your friends. And in a few years, you really want to start setting aside some funds now so that you can purchase your first home, right? For the folks who are a little bit older like myself, your aspirations may be very different, right? So you may be looking to start planning for your kids' secondary and tertiary education. And you may also be thinking about those bucket list destinations and experiences that, you know, you've been talking about for a while and you want to bring them to life. And you may also be thinking about retirement. So whatever your goals are, the reality is that a unit trust fund has been designed to support you. So just to be clear, right? We're not here this evening to talk about a single product, but rather we want to point you to the solutions that are available to help to meet those needs at every life stage. So let's talk about some of these unit trust solutions. For investors that are risk averse, or we call them conservative investors, right? Who may want to lock away some of the money, but just for a short period of time, and be able to access those funds on demand. We have a fund that is designed specifically for this purpose. In fact, we have two. We have a JMD money market fund, and we have a USD money market fund. The JMD Money Market Fund was launched in November of 2013. It currently has a net asset value. We also refer to it as NAV, as you can see on the slide here, that stands at over $12.3 billion, right? The portfolio is heavily weighted towards a mix of short to medium-term fixed income instruments, and these include your repos, bonds, and cap loans. The portfolio is designed for those investors who want to have a stable source of income, but they also want to make sure that their capital is preserved, as well as being able to access liquidity, right? So this is achieved primarily by the fund manager investing primarily in Jamaican dollar money market instruments. Because of that, the money market fund is a lot more suitable for investors who are conservative, who are seeking those short-term investment vehicles pending a decision around a longer-term decision. So again, if it is that you want the funds to accumulate the funds so that you can pay down on that home, or you want to accumulate the funds so that you can have it available for your education, then this is an ideal fund for you. As at the 1st of May, the NAV per unit for that fund was $15.67. We show it to 4 decimal places, but for simplicity, I'll round it down to 2. The calendar year to date growth of the fund stood at 2.08%, and this is against a benchmark of 1.95%. So we would have outperformed the benchmark in relation to this fund. And it has a 12-month growth rate of 3.86%. Moving on to the USD Money Market Fund. This fund would have been launched in October of 2014. Currently, the NAV stands at just over $70.9 million. And this is US dollars that we're talking about here. The portfolio is weighted towards fixed income instruments, including bonds and repos. This portfolio, similar to the Jamaican dollar money market fund portfolio, is designed for those investors who require a stable income, they want the capital preservation, and they want the liquidity. And this is again achieved by investing in US dollar money market instruments and other interest-bearing securities. Because of that, the USD Money Market Fund is more suitable for those investors who are more on the conservative side and seeking that short-term hard currency investment option pending a longer-term investment decision. In terms of financial performance, the fund as at the 1st of May had a NAV per unit of $1.21. Year-to-date growth was 0.72, and the 12-month growth rate stood at 3.45%. Relative to our peers, this fund ranks number 3, so again, within the top 3 among our peers. For the more moderate investors, we do have a few more solutions. We have a JMD high yield asset and loan portfolio. We also refer to it as the income optimizer. This fund was launched much later in February of 2017, and it has a NAV that stands at just over 2.9 billion Jamaican dollars. This portfolio consists of fixed income instruments such as bonds. It also includes cap loans and equities alongside repos. The portfolio seeks to maximize returns in terms of its objective, and this is through Jamaican dollar capital appreciation, and as well as by investing in medium to long-term fixed income securities. So this one is designed, as I said before, for investors that have a moderate to aggressive risk profile, seeking some capital appreciation, and it has a medium to long-term investment horizon. And so these investors, again, they're considered as moderate because they are willing to accept moderate to high price fluctuations relative to a safe money market fund. As at the 1st of May, the NAV per unit stood at $14.72. Year-to-date growth stood at 2.12%, and the 12-month growth stood at 4.29%. Relative to our peers, this fund ranks number 3. Moving on to the other fund, which is the USD bond fund. We're still in that moderate category in terms of our investment appetite. The USD bond fund was launched in October of 2014. Its NAV stands at just over $16 million, and the portfolio consists of fixed income instruments, including bonds and repos. This portfolio is designed to maximize returns, and these are US dollar returns that we're speaking about, and it does that through capital appreciation and income by investing in medium to long-term fixed income securities. The bond fund is more ideal for investors that have a moderate, even up to aggressive risk appetite, and it's designed for those investors who are seeking capital appreciation and are willing to accept, again, moderate to high fluctuations in unit prices over the short term. In terms of financial performance, as at the 1st of May, the NAV per unit stood at $1.33 US, and calendar year-to-date growth stood at negative 0.91%. And I think I need to put this in context, because when we look at the benchmark for this fund, the benchmark performance would have been negative 2.94. Of course, this is across the industry because of a lot of us should be familiar with Liberation Day or April 2nd, when Sir Donald Trump would have made all these announcements around tariffs implementation, and this would have sent the bond market into a very volatile spate. And so we saw where global bond holdings and even in the region, we would have seen a lot of variations and fluctuations in the price of bonds, which would have impacted the portfolio, not just our portfolio, but also the benchmark, as would have been shown in the results. The other fund is our Jamaican dollar real estate fund. This fund is a relative newbie. It was launched in March of 2023. Its NAV stands at $6.1 billion, and the portfolio consists of real estate properties predominantly and some repos that were awaiting deployment into additional property assets. This portfolio is designed for those investors who desire long-term capital appreciation, and it allows investors to gain access to a broad range of income and growth-producing real estate assets. Of course, all fully tenanted by blue chip tenants, right? Because of that, the money market fund is more suitable for investors with a moderate up to aggressive risk profile, and who are seeking capital appreciation. It is also geared to those investors who are willing to accept some price fluctuations during the course of their investments. This is one of our stellar funds. As at the 1st of May, the NAV per unit stood at $14.92, and the calendar year-to-date growth stood at 3.74 against a benchmark of 1.99. So again, outperforming the benchmark by far. The 12-month growth rate stood at 16.77%, and I said that in the teens, 16.77%. And relative to our peers, we are ranked number 2. All right, so that takes us to our last fund, and this fund is classified in the aggressive category. And this is our JMD Caribbean Equity Fund. This fund was launched in November of 2013. The NAV for this fund stands at just over 674 million Jamaican dollars. The portfolio, as the name suggests, is weighted towards a mix of ordinary shares, preference shares, supported, of course, by some repos to enable us to be able to deal with redemption requests. The top stocks that we have in this portfolio include Seprod, Wisynco, Outlook, among other stocks such as Karrian, Bonitto, Panjam, Indis Farmers, and so forth. And the holdings that we have in these stocks range somewhere between 5% and 15%. This portfolio focuses on investing using an approach of selecting stocks based on 15 principles. I don't have enough fingers to show the 15, but 15 principles or attributes are used in determining the stock selection process. And this involves, and this goes back to the principle of successful wealth creation for investors. And what do we mean by that? So there is a wealth creation framework, and this is predicated on a few things. We call them the 5 laws of wealth creation. These include owning a few high quality businesses. This I can do 5, right? Thoroughly understanding them, ensuring that they are strong long-term, they're positioned in strong long-term growth industries, prudently managing other people's funds, and last but definitely not least, holding these businesses for the long term. So this is not new in terms of this approach to investing. If we follow Warren Buffett, renowned investor, elite investor, these are some of the principles that he himself emulates in terms of his investment decisions. The investment decisions also incorporate fundamental analyses, and investments are, of course, managed with a long-term focus. The Caribbean Equity Fund is designed for those investors, as I said earlier, with an aggressive risk profile, and those who are seeking to diversify their equity portfolio holdings. It is also ideal for those with long-term investment horizon and who are seeking to maximize capital growth. From a performance perspective, as at the 1st of May, 2025, the NAV per unit for this fund would have stood at $28.46. The calendar year-to-date growth, again, negative 0.07 against a benchmark, which is negative 4.03%. Again, this is impacted or would have been impacted by the volatility in the bond holdings in the portfolio, similar to the USD bond fund. All right, so in terms of the 12-month growth rate, that stood at 5.23% relative to peers, relative to the peers, we ranked at number 1. So in summary, that was quite a mouthful, taking you through the 6 portfolios that NCB Capital Market manages on behalf of unit holders or clients. But in summary, I want the key takeaway to be that for the calendar year to date, and calendar year to date naturally is January up to the 5th of May, we wanted to take you as close as possible to today's date. Up to the 5th of May, we had 4 funds of our 6 funds that are ranked among the top 3 highest performing funds in the market. We also have 4 of 6 of our funds that are outperforming the identified benchmarks. And of course, we have to back this up with a caveat, right? That the past performance is definitely not a predictor of future results, but this does showcase that a firm foundation for growth is in place. And we want to encourage you online to think about this some more and consider the suite of diversified solutions that are available through the various unit trust funds. And again, we're not doing product pushing, we're doing solutions. And so we're not even saying, even though most of these funds are diversified, we're not saying to just choose one. In looking at your portfolio, we're encouraging you to look at a mix of these different funds to ensure that you maintain a balanced position. Over to you, Jodi.
Oh, awesome. Thank you so much for that, Kerine. Thank you for sharing the suite of unit trust solutions. You would have made mention of risk appetite. For those listeners who are not so au fait with what that means, let me just briefly explain. So if you're a conservative investor, you're primarily concerned about preservation of capital. You want to make sure your money is safe. So let's move now to a moderate investor. You want to strike a balance between portfolio stability and portfolio appreciation. And if you're an aggressive investor, those investors who seek capital appreciation and have the appetite for high price fluctuations. So just so you know, you can, toy with that in your brain a bit. We'll revisit that later. So most investors struggle with how they should invest or what to invest in. At NCB Capital Markets, however, we have created an innovative digital solution to assist you in determining your risk profile. Dr. Karrian, please tell us more about our risk profiler tool.
It would be my pleasure, Jodi-Ann. So guys, remember earlier I told you that we are super accessible. So first, if you want to open an account, there's Go IPO, or Go IPO platform allows you to self-help and start creating an account. But I know some of you, before you do that, might say, I'm motivated, I want to start investing, but I don't know if I am conservative, like what Jodi said, or if I am moderate, or if I'm aggressive. How can I figure that out? Do I have to go to a branch? Do I have to sit with somebody? Well, the good news is you don't. So we have a risk profiler and asset allocator that we have developed and launched. The most amazing thing about it is that you can do it from anywhere once you have WhatsApp. And I know basically everybody have WhatsApp these days. So we will give you the number at the end. Don't worry. You might be like, okay, so where's the number? But we want to make sure you stay on. So it will be the last slide for spite. So, right. So we'll give you the WhatsApp number and we'll tell you what to text to the WhatsApp, right? It takes only a few minutes. It's a personalized risk assessment for you. And then once you feed it all the information, it asks you questions, it actually recommends an asset allocation that matches your profile. So I'm going to give you a little taste of what, the asset allocation might look like, and also how that is married to the funds that Kerine just explained to us. All right. So Jodi spoke about the conservative investor. So I know intuitively, when you think about a conservative investor, you might be thinking, oh, well, I'm going to hold all my money in cash, or I'm going to put all my money in a repo. Like I'm scared, I'm conservative, I don't like risk. But actually, that's not what it means. It means that we find a very tempered way to create a portfolio for you that takes minimal risk. So you can expect return with low risk. So for example, for the conservative investor, we would recommend something like this. Most of the funds would be in the money market fund. That's expected. The money market fund is a short-term investment tool or asset. So usually those assets are a year or shorter in tenure, right? Then the second highest portion would be the US dollar bond fund. Again, usually bonds offer a steady stream of income, whether it be semi-annually or whatever, depending on the bond. And the bond, it does not have as much volatility as, let's say, equities or some other asset classes. Then the other two slices, 20% each, we have the income optimizer, which again would be, bond and bond type instruments, and the Caribbean equity fund. So you see where we are giving you some exposure to equity, but not so much that you would be sleepless, right? We were making sure to put a little zing in the portfolio to ensure that you're not just sitting on the money, that the money is actually earning for you. And then, as we call it, the alpha, the real estate fund, we put in a sliver, 5%, again, to make sure that you benefit from the upside return, yield, and the growth rate of that fund. So for the moderate investor, we step it up a little bit. So instead of giving you that big chunk that we gave you in money market fund in the conservative investor profile, you'll notice that has shrunk, right? We're looking at more medium term, medium risk type investments. So we're heavy on the Caribbean equity fund. We're heavy on the income optimizer. We've given you a bigger slice of the real estate fund, and we've given you some bond fund. So that's the moderate investor. For the aggressive investor, that means the way that you would have answered the questions suggests that, one, you're working with a longer time horizon, you're relatively comfortable with risk, and you're looking for upside return, significant upside return. So it means that this portfolio, as the name suggests, would be more aggressive than the others, right? So the biggest slice of this portfolio is the Caribbean equity fund, 40%. Second would be the real estate fund, 35%, followed by the US dollar bond fund, 10%, income optimizer, 10%, and the money market, 5%. So this is just an example. So put it this way, depending on how you answer the risk profile questions, it will determine what portfolio is suggested for you. So it's not a portfolio that is being forced on you or retrofitted on you. It's actually literally whatever you tell the AI chatbot, it spits out the portfolio to match your circumstances and your goals. So with that, I am going to hand over to Jodi to give you some more insights, Jodi and the team, concerning your journey.
All right, thank you so much for that, Karrian. And let me ask our guests to direct your questions to the Q&A box, please. Right, so at the end, we'll definitely be taking those. So as Karrian would have shared, we have, through our risk profile, essentially templates or, depending on the questions, the answers that you give to the questions, right? But it's also important that as you begin your personalized investment journey, you focus on what we consider the 3 Ps, which is to predict. And that is where the expertise of our wealth advisors and our research team and our portfolio managers come into play, right? So we help you, depending on what your goals are, to predict, right? What is the market going to look like in the next year, even though Trump is making that very hard for us? What the market is going to look like in the next year, in the next 2 years, right? That's what we do. The next P is to plan. No, you cannot build an investment portfolio without first determining what your goals are. So what are your short-term goals? What are your medium-term goals? What are your long-term goals? And of course, we're going to build your portfolio to match those goals. Important to persevere. Why persevere? Because markets goes through peaks and troughs. And so you have to have at the back of your mind always, what is my goal? Are the assets within my portfolio still solid? Are they sound? And this is where you call on the expertise of the NCB Capital Markets Wealth Advisors. Apologies, the light. Apologies, right? This is where you call on the expertise of your NCB Capital Markets Wealth Advisor to guide you along that path. And that's why we are here today, to share that with you. So, as Karrian would have mentioned, we invite you to take the first step. Go to WhatsApp, type My Wealth, the number is on the screen, and determine what your risk profile is. And that is the first step to begin your investment journey. So as I said earlier, we'll now take the question and answers, but let me first say thank you so much for staying with us so far. And I hope that what we've shared with you today would definitely assist you as you begin. And I would have asked a few questions. What are your plans for the future? Are your child's education money put aside? What about retirement? What about furthering your education? All of these are key milestones that you want to ensure that you hit. So let me see what we have so far in the question and answer. All right, so this is from Sarah Gay. Good evening. Is the follow-up investment monthly or quarterly for the NCB cap fund? Kerine, are you able to take that one?
Sure. So the investments, so you have the option of paying monthly or quarterly. The important thing is that we want to encourage our investors to take the approach of contributing recurring, making recurring contributions towards their portfolios. And so whether you want to do that on a quarterly basis, on a monthly basis, monthly is preferred because that would allow you to develop some consistency in terms of topping up the funds, but you have the option.
All right, I think that answers Sarah's question. All right, so this is from Noel Tucker. For Jamaican overseas, how do we participate in this wealth creation? Quite easy, Mr. Tucker. So I would love if you could share with us, or I could share with you my contact number, and we will have a wealth advisor contact you, or you can contact me once I get that details, and we'll take you through the steps. But it's quite easy for you to begin your journey. Elton Harris, after initial investment, can the other required monthly payments be salary deduction? I'll take that one. Sure, that's what we actually encourage, right? So we have on our app, on our NCB Capital Markets app, you're able to set up that standing order all on your own. So it's very easy. All right. So yes, the answer to that is that's exactly what we encourage. Do we have any other questions? All right, so you should see popping up a poll. So we'd love to hear from you. Your feedback is very important. So we invite you to complete the poll before leaving us. Again, thank you for joining us this afternoon or this evening. We appreciate your presence, and I hope that you have garnered knowledge. And for our new clients, as I said earlier, I hope that you're happy that you decided to be part of the NCB Capital Markets family. Do please complete the poll.
All right, Joe, so there is another question in the chat.
There's enough. Okay,
in relation to how long is NCBCM definition of long-term. So here's the thing. So long-term will vary to different investors, right? But if we were to use some broad ranges, I wouldn't just stick to long-term. So short-term, I would consider short-term to be, a year and a half, up to 2 years could be considered short-term. Medium-term would be anything up to maybe 5 years. And long-term could be anything in excess of 5 years. But it varies, right? I mean, if you're 61, long-term could very well be 10 years, right? If you're 16, or let me use another age, if you're 20, long-term could mean 50 years, right? So I think it depends on what your goals are, and that will determine the duration or your consideration of short, medium, and long-term. because that is not necessarily static.
All right, thank you for that, Kerine. I'm seeing another question from Elton. And just want to ensure that I am asking your question correctly, Elton. So we select a category that is conservative, moderate, or high-risk investor, give the money, and NCB CM manage a fund. Essentially, yes. So the questions that when you visit our risk profiler tool, there are several questions that will be asked that will determine which category you're likely to fall in. Then at the end of that, typically we have a wealth advisor that you'll have the discussion with. Yes, you give us the money, and then we will diversify your portfolio depending on your risk profile. So Karen would have made a reference to, what that you saw that pie chart and how it is that we will invest your fund depending on your risk profile. So yes, 1, 2, 3, do the risk profile, give us the money, and we manage the fund. Any other questions? Please remember to do the poll. Your feedback is very important to us. Before you go, we encourage you to do the poll. And we'll be contacting you after as well. So for those persons who also had questions, we encourage you to do the poll. All right, let me see if there are any other questions. Okay. All right, so this would definitely be for Kerine. How should investors balance their portfolio between equities and bonds in the current economic environment, considering factors like interest rate trends and market volatility?
All right, that's an excellent question. So agreed, it's a tough time for investing, particularly if you're doing it on your own, because finding that balance between how much equity or how much fixed income you should invest in can be quite tricky, particularly, as I said, if you're doing it on your own. So here's the thing, given the volatility that would have been unleashed following the announcement of all the tariffs in the US and the impact that that would have had across the world, what we would have seen in as the aftermath of that announcement is that there would have been a lot of volatility in the bond market, right? That would have impacted bond prices. And so as a professional manager, some of the steps that we would have taken is to look at exiting some of the exposure that we hold in volatile bond instruments. As an individual, it may be a little bit more difficult to time the market appropriately in terms of exit and watching the market on a daily basis to determine those points of exits, right? Which is why we encourage persons to go the approach of the funds, the route of the funds, rather than doing it on their own if they are not experienced. In terms of the interest rate environment, what the outlook is showing now is that there's an anticipation that there will be further reductions, maybe not immediate, but in the future, we're anticipating that there will be further reduction in interest rates. What that means locally is that from a valuation perspective, companies will be able to accrete or see more value because the cost of funding is lower for them. And so what is anticipated is that we should see some traction building in the equities market. So in terms of diversification, again, it depends on your risk profile and your risk appetite and whether or not you're willing to get a greater exposure in equities versus fixed income instruments, and also whether or not you have the ability to diversify across geography. So is it a case where you're basically restricted to investing in Jamaica only, then that poses a challenge versus a professional or an experienced fund manager that can take positions in multiple jurisdictions. So my advice would be speak to your advisor to get a better understanding of what is appropriate based on your risk profile.
All right, thank you so much for that, Kerine. All right. All right, given I'm seeing no further questions, I'd like to take a final statement from our panelists. So Is there anything you'd like to leave our guests with, Kerine?
Sure, Jodi. So encouraging everyone to think about your financial journey, think about the experiences that you're hoping and the milestones you're hoping to achieve. Let's not be restricted in thinking in silos or be one-dimensional in our thought process about wealth building. It's a journey, right? And we need to plan for every milestone and every stage of life that we're likely to be going through. And it starts now. So start setting aside funds that will take care of those short-term needs that you'll have, those medium-term needs, those long-term needs, however you want to describe the duration or the period. But start the process of planning now. And what we're encouraging you to do is to speak to your advisor, your wealth advisor, to gain a better understanding of how we can help to structure that journey to ensure that your financial goals are met while you're accumulating your wealth.
All right, thank you. Dr. Karrian, any final word for us?
All right, what I want to say to all the people that have tuned in is that you don't have to start big. I know many people have a misconception. Once you hear wealth, you're thinking, Lord, I need a whole heap of money. I need a lump sum. But that's not it, guys. I said the best time to start was yesterday. The next best time is today. Guys, start small. You saw in the presentations that Kerine did that for the unit trust products. It's a minimum of 50,000 Jamaican dollars. And for the equity products, it's less. So I'm just saying, don't think millions or, you start with what you have. And as a matter of fact, I'm sure if you talk to an advisor, regardless of the amount you have, there's something they can start you with, right? I want to also make a plug to them to say that if you can't get in front of an advisor immediately, as I told you, we have our goipo.jncb platform where you can go on and you can start to fill out the form and upload your IDs and all of that. You could do the risk profiler, which is another digital self-help tool to wrap your mind around, your investment style and what your portfolio might look like. So you could very well go into a conversation with the advisor with some, pertinent questions based on, what you've read or what you've discovered versus the risk profile. So guys, wealth creation, it's up to you. It's in your hands. We're just here with the tools and experience and the vehicles. We're here to support you on the journey.
Thank you so much for that, Dr. Karrian. And you're so right. You don't have to start big. You don't have to start big. What is important, however, is that you're consistent. So you can't put your 50,000 one time and you stop and you say, Lord, not one for my money. No, you have to be consistent. So we have solutions for that. So I invite you to speak with your wealth advisor to hear more about that. And thank you again so much for joining us this evening, and do enjoy the rest of your evening. Bye.